Hello, everyone, and welcome to another episode of the Daily Gwei Refuel, where we recap the last 24 hours in the Ethereum and cryptocurrency space. Let's get into it for today. So, I guess the price here of ETH has been a bit stale today. That's expected after what we saw over the past 24 hours or so, where the prices came down. I think right now the volatility has kind of subsided a bit, and the market's just trending sideways for now. You can see that on the chart here. It's been trending sideways a little bit. I don't expect any fireworks for a little bit here. Maybe I'm wrong, but it seems the market needs to kind of cool off. People need to be more confident again, and then we might head further up. But yeah, not sure what's going to happen there, so we'll keep an eye on that one. Same thing for Bitcoin here. You can see still just trending sideways. And then we have the DeFi Pulse Index as well, which is doing similar things. So, you know, I guess in times of when the market kind of corrects and dumps down, it tends to correlate a lot more than it would if it was going up. So, normally correlations decrease in a bull market and they increase in a bear market. But, even the short-term moves, the correlations are there, right? We all see what happens when Bitcoin dumps, right? The rest of the market tends to follow. So, but that's just the short term for now. And I don't expect this to be anything like the bear market. As I said yesterday, I still think we're in this bull market, and I still think we have a ways to go from here. Speaking of, I guess, the market and things that can affect it, we had this really insane news come out just a couple of hours ago that the block put out. So they put out an article that stated that the Chinese police have seized $4.2 billion worth of crypto from the Plus token Ponzi. So for those who don't know, this is a pretty big Ponzi. This is actually... Some people think that this Ponzi was responsible for the 2019 run-up we saw in Bitcoin and Ether, where Bitcoin went to, I think it was like 14K or something like that, and Ether went to the high 300s, and then through some on-chain analysis, people actually saw that the timing was matched up, sort of thing. So I haven't looked into that lately, but considering the kind of the amounts that were sent to this Ponzi, it is plausible. So you can see here that 1% of all Bitcoin, about 200,000 Bitcoin, was actually associated with this Plus token Ponzi. 833,000 ETH, which is 0.73% of the supply. There's a bunch of other coins here as well, like 1.4 million LTC, 27.6 million EOS, 6 billion Doge, which is actually, I think, like 5% of the total supply of Doge, which is quite insane. So yeah, this isn't actually new. I think from what I dug into it, we can actually see that this news is in particular probably not fresh. I think it's actually about 6 months old. It's just been now confirmed that the Chinese police are in custody of these assets. I think before it was kind of known because the funds stopped moving, or they were being like some funds were moving and they were washing through different addresses. You can see here that this person's claiming that the address on Etherscan here, one of the addresses associated with them hasn't moved their coins in 140 days, which is quite a while. So yeah, still developing story. I think we don't really have a clear picture here. People think maybe this will lead to a dump in the prices because the government's just going to offload these coins now. That's not usually how these things work. The coins will either... I mean, the way it works in the US is that when this property is seized from criminals, it is auctioned off in kind of private auctions on secondary markets. This is actually how investor Tim Draper, for those of you who know him, how he got access to a large chunk of Bitcoin back in the day. And just recently we saw that the Silk Road Bitcoin is going to be auctioned off in the same way. I'm not sure how it works in China. It's probably totally different given it's China, but definitely we'll keep an eye on this and see how it's going and see how it evolves. Next up was, we obviously spoke about this yesterday, about how there was the compound liquidations of over $100 million due to the DAI price going to $1.30 on Coinbase. So there was actually a lot of discussion around this on Twitter today. It was kind of hard to follow. There was a lot of back and forth. We had everyone's favorite green frog, Chainlink God, in a lot of the threads because this was an Oracle issue, right? Where the Oracle reported this kind of number that it shouldn't have been able to report to Compound. It functioned as it should have, but there should be kind of like an aggregate feed that gets fed of the price so that it doesn't just come up as $1.30, right? You could have 10 different feeds, and if 9 of them say, dies $1.01, one of them says it dies $1.30, it'll take that into account and kind of like average out the price. And this is what Maker does with their oracles. And this is what Chainlink does, of course, as well. So, we had Robert Leshner put out a kind of tweet about it, and there's actually a blog post here, not a blog post, sorry, a forum post where they went through what happened with Compound's Oracle and did some analysis here. So I'll leave the link to that in the description on YouTube if you want to go check that out. Same with all the other things I'm talking about today. And then Robert Leshner, who's the CEO of Compound and the founder of Compound, for those who don't know, he went on to say that only 124 out of 225,000 users were impacted. There weren't any under-collateralized accounts, and all the markets seem healthy. Now, I mean, I get that, but at the same time, I think what he's doing is he's using Ethereum addresses as a proxy for users here, which I don't think is very accurate. We saw the volume that was liquidated, right? I think in DeFi, what matters more than anything is volume and liquidity more than individual users. This is a pretty big blow. As I mentioned yesterday, there was one address that got hit for $40 or $50 million, and it actually turns out that address might belong to Celsius, the centralized lending platform. I don't know that for sure, but from my investigations and talking to a few people, it seems like that's the case. So yeah, as I said, Chainlink God, who's a huge Chainlink advocate on Twitter, you've definitely seen him if you're on Twitter. He was on the attack today about oracles. He went after basically Compound's Oracle, Uniswap's, Oracle. I mean, using Uniswap as an Oracle, for example, and basically saying that, rolling your own Oracle solution is not the best thing to do. You should just use, standards that we already have, like Chainlink and things like that. Now, I tend to agree with him. I'm one of those people who actually think that Chainlink is great. It's a great project. I think what they're doing is really important. Oracles in DeFi are extremely important. You want a strong oracle for exactly this reason. You want the prices to be reported correctly. Because if they're not, you can have these things happening within different DeFi protocols that are quite not expected, basically. So yeah, I mean, I expected this from Chainlink God. I actually said to one of my friends yesterday, I'm like, I can't wait for Chainlink God to see this, because he's going to go on the attack, because he'd actually been warning about this for weeks with Compound, basically saying, what the oracles that Compound uses aren't great and they are not going to function as expected. And, he was right. Credit where it's due. There was another kind of person on Twitter called DeFi God, putting out his thoughts here, saying that he's very angry over these liquidations because they could have been avoided, by not using just Coinbase's price feed and using Chainlink's oracles and things like that. And again, I agree with this to an extent. I really think that if you've got a DeFi app out there and you need an oracle, which pretty much all of them do, you should seriously consider Chainlink. And I'm not saying this because I have I own Link bags or anything like that. I actually don't own any Link. I just think that, after seeing what's been happening in this space and how important oracles are, and how I've actually interacted with the Chainlink team myself a lot as well. I know them, I've spoken to them as part of my role at Set. I trust them, and, you might get turned off because of the Link Marines on Twitter or whatever, but that's just an unaffiliated kind of like, I guess you could call them army of people that obviously, made some money on Link and are really excited about the project because of that. But that doesn't take away from the merits of the project. The project is sound. It works. I actually speak to people running nodes, and it works really well. So yeah, when you think about that and you take that in consideration, I can see their point of view here. Hayden also put out a tweet about oracles too. And he said that from what he heard, the Compound liquidations would have been much worse without the addition of the Uniswap protocol TWAP Compound Oracle. So what TWAP stands for is time weighted average price. So what this does is it basically averages out the price of an asset, of a trading pair basically, and uses that as the oracle price. I'm not sure exactly how Uniswap does it, but that's generally how it works. He goes on to explain that while the Uniswap Oracle price spiked, while the Coinbase Oracle price spiked, Uniswap's price did not increase much, causing the most extreme prices to be rejected. And of course, there was some discussions around, from Chainlink God again, and saying that using Uniswap as a price oracle is not the greatest thing to do. It's an insufficient solution when you want to secure real value and things like that. Now, there's a bunch of other discussions in this thread. I'll link it definitely in the YouTube description as well for you to check out. I won't go into it all today. There was an interesting post on the Eth Research forum from his username McKailinen, sorry, here talking about an executable beacon chain, and this is part of the ETH1 to ETH2 transition. So it actually gets quite technical here, but the TLDR is that he's proposing an ETH2 execution model that's alternative to the executable shards with support for single execution thread enshrined in the beacon chain. Now, as I said, this is very technical, but this is actually quite an important post and quite an important thing to think about because, as I said, it plays directly into the ETH1 to ETH2 transition, which is, in my opinion, we have phase 0 going live with the beacon chain, which kickstarts the ETH2 chain. That is probably the most important, but I think the ETH1 to ETH2 transition is pretty much just as important. It's going to be just as big of a deal, if not a bigger deal, because we get to basically get rid of proof of work and use proof of stake for ETH1 as well now. So yeah, go have a read of this if you're into the more technical things. I'm not going to try and describe it here because, as I said, it gets very technical and there's a lot of discussions underneath here as well. So as I said, I'll link the post in the description. You can go check that out. So for all our budding ETH2 validators, so for everyone's looking to stake on ETH2, you've got your ETH into the deposit contract, you need to set up your validators now. There are some amazing guides that have been put out by Summer Isat here. I'll link this. It's on his Medium anyway. So he's got 3 guides so far, with the 4th one coming out soon. Basically, he's got the guide to staking with ETH2 for the Lighthouse client from Sigma Prime. He's got the one for Nimbus from Status, and he's got one for Teku from Consensus. And then he's obviously going to have one from Prismatic Labs for Prism. So these guides are quite detailed. Like, I think they're about 20-minute read each, and he goes like in depth, basically, like really in depth. From 0 to 32 ETH, basically, staking. And he explained, he's got all these amazing diagrams here. He's got a ton of different things here, like step by step, each step you need to take to get this all set up, right? All the commands that you have to type in, everything like that. So if you are stuck at all in your journey to setting up a validator, right, and you don't understand what some of this stuff is, I highly recommend checking these guides out and giving them a read. They will help you a lot. And as I said, he's got them for the 3 major clients, and he'll have it for the 4th one soon. Maybe he has it now if I refresh the page here. Yes, he does. Okay, that was published 3 hours ago. I hadn't refreshed it yet. So he has the Prism one as well. So whatever client you're running on ETH2, he's got a guide for it. So definitely go check that one out. And speaking of ETH2 staking as well, dapnode has a mainnet package that's ready. Basically, their Prism package is ready now, so you can go check that out as well. For those who don't know, dapnode is basically an operating system that you can run on your hardware that lets you basically easily set up different nodes and different kind of like infrastructure for Ethereum and for other networks as well. So you can set up like ETH1 nodes and now ETH2 nodes. I used them a lot for the ETH2 testnets, and it was seamless. It was really great. So yeah, definitely go check that one out as well. All right, so a bit of news that came out that, I hadn't heard about this project for a while, but basically there's a report that Facebook's Libra could launch its first stablecoin in January, which is a lot sooner than what I kind of figured. We first heard about Libra like a few months ago, and everyone was just like, wow, Facebook's going to kill the game here. But then what ended up happening was that the regulators, and I guess like especially in the US, were like, they're not very fond of Facebook. Facebook doesn't have a very good reputation with regulators. So when they announced this, the regulators were like, oh no, we can't let Facebook issue their own currency. This is not on, which, for better or worse, is what it was. So then they had people pull out of the Libra Association and things like that. They had a bit of a bumpy start there, but it seems like they're still chugging along, and they want to get this out there as soon as January. So yeah, we're going to keep an eye on that. There's not much meat in this article here. I think it's just an announcement. This is going to be kind of coming in January. So, we'll see what happens. January is only 2 months away, so much sooner than I expected. All right, the last thing I wanted to talk about was, so for those who don't know, the centralized exchange OKX had paused their withdrawals for quite a while, so no one could get their crypto out of the exchange, and this was due to one of the co-founders being questioned by police. There was a ton of FUD around this. There was like, he's under arrest, like he's going to jail, or everyone's coins are lost, the usual, the typical stuff. But they actually resumed withdrawals yesterday, and they've seen quite a big outflow of Bitcoin specifically. Almost 30,000 Bitcoin has left the exchange, and we saw the same thing happened when the BitMEX founders were charged and a few of them were arrested, where the withdrawals still went through. They weren't paused, but there was like a withdrawal window that they missed because BitMEX only does withdrawals like once a day, and they actually do them more frequently now. But what ended up happening was that, we had a ton of BTC flow out of BitMEX because of this. And it's only natural, right? I mean, I personally, if I was using a centralized exchange and then this was happening with it, I wouldn't keep my coins there if I could get them out. Like, why would you? So yeah, I mean, just seeing this chart from Glassnode here showing it being a pretty huge withdrawal from OKX, which is one of the bigger centralized exchanges, doesn't really come as a surprise to me. What's more surprising, there's still 212,000 Bitcoin in there. Like, as I said, if anything like this goes on, I would be getting my coins out. And, this is exactly why I don't even use these exchanges anymore, is because they have this risk associated with them. When you're using decentralized finance protocols, especially something like Uniswap, like an exchange protocol that's fully decentralized, no one can take your funds here, right? So yeah, I don't know. Tons of people still use centralized solutions, and that's fine. It's just not my cup of tea for sure. But yeah, so and in general, I think for those who follow and who like to follow on-chain stats and on-chain data, I actually wrote about this in the Daily Gwei today as well. On-chain data is like really rich, right? Because we've got no base layer privacy, you can get like a ton of insights from it. And one of my favorite websites to actually go on is Glassnode. So they have this amazing studio on here. So studio.glassnode.com. For those listening on the podcast, you won't be able to see it, but I'm just quickly showing it here. You can see here they've got metrics for like, new addresses, active addresses, addresses with balance over a certain amount. So if an account has, more than $10 of Bitcoin or Ether in it, they show you that. And these insights can kind of like let you see, if we're in a bull market, if we're in a bear market, is there going to be a price move? There's tons of info here. Now I will say that there are most of the best insights are behind subscriptions. You have to pay a subscription. This isn't an advertisement or promotion for them by any means, but they have a few free insights you can go check out as well. And they're not the only data kind of provider as well. You've got Coin Metrics, Into the Block. There's a bunch of others. Like there's actually a lot now out there that I tend to use, and they're just super interesting to look at. So definitely go check those things out. All right, that's it for this episode, everyone. Thank you again for listening. We'll be back next Monday to go through all the news that happens over the weekend, of course. Don't forget to subscribe to the podcast, the YouTube channel, and the newsletter. And and follow on Twitter and join the Discord. We'd love to get some more conversations going in the Discord. If you need help with anything, be sure to join. You can talk with everyone else that's in there, and we'd love to see you in there. So yeah, thanks everyone for listening.